Okay, recording this video Sunday 17th March 2013. It's about 9:24 p.m. Chicago time. I hope you're having a good weekend. And not been trading the last couple of days. We've got friends in town and they've got a small 18-month-old, so I've not been getting up at 3:30 in the morning kind of disturbing the peace to do my trading. And it's kind of been good. Thursday and Friday were pretty uninteresting days. Small ranges, always tricky to trade small range days just because there's not a lot of kind of trending activity to kind of jump on board. But then this weekend, the news out of Cyprus, and I hope everybody's kind of following what's going on there. The market's fallen out of bed and extraordinary kind of changes. I mean, Cyprus is only 1 million people. It's not a big deal. It's about 0.5% or something of European GDP, and what they chose to do was confiscate the money that the banks have lost from the depositors. So anywhere between 6 and 10% of deposits being confiscated, and those numbers actually might change. It's all kinds of, obviously hell broken out there. People extremely angry. The reason why Cyprus and Cyprus banks have got in trouble, they did have a real estate boom there, but on the balance sheet they were sitting on Greek debt, and of course the Greek debt's got its haircut. Haircut sounds like such an innocuous word, but it's kind of got written down massively, and so that's affected the sustainability of the banking system in Cyprus. And so 1 million people in the EU chose not to bail it out. It's like, they bailed out Portugal, Spain, Italy, and so on. It's like, they've not bailed out Spain yet, but they're ready to bail out Spain. They've drawn a line in the sand at Cyprus, which is 1 million people in a small banking system. They've given some money towards it, but half the money is coming from the depositors. So extraordinary times. And even though they've got a deposit guarantee system in Cyprus, they're still taking the money. So anything can happen in a sovereign debt default crisis, and the banking system is not safe because the banks are in cahoots with the politicians to keep the game going, and as soon as one falls over, the other will fall over, and so rather than letting that happen, they take the money from the depositors. So extraordinary. Imagine if you woke up tomorrow and you were told that 10% of your deposits in your savings accounts in your bank had just been taken. How would you feel? Not good, I'd imagine. But anyway, so had a few hours since the markets have been open. I mean, is this a game changer? I don't know if this is a game changer, but certainly, the rules have shifted. Certainly, if you're unsure about your bank and you're sitting in Italy or Spain or Ireland or Portugal or wherever, and you're kind of unsure as to what to do with your money, and you think, well, all of a sudden they could come along and confiscate my money, it doesn't bode well for the stability of the banking system and causing runs in the banking system. And remember, the Great Depression was not caused by the stock market collapsing. It was caused by the banks going under and runs on the banks, and that's why we have FDIC insurance in order to stop runs on banks. And even with a similar type of policy within Europe, they still took the money away from the deposit holders in the banks in Cyprus. So anyway, what are we looking at? So we've just destroyed about a week and a half's of progress on the E-minutes. You're looking at the 40,500 tip bar chart. We're down in the 30s. We closed on Friday up in the 50s, so we're off 20 points kind of down here. And last couple of days we made a pullback to end of trend. All these blue professional bars kind of at the highs up here just towards the end of the day. Up bars are at the highs, up bar, blue professional bar. And a Rambo pattern kind of up there with that pullback to end of trend, and look at the bearish divergence kind of coming in. Always say with tops, bottoms are made with exhaustion patterns. Definitely, you have to have exhaustion selling to kind of clear out the sellers. But sometimes, tops can kind of just whimper out with a lack of demand and kind of just roll over. So we've not seen that exhaustion buying on the upside, but we have seen these pullback to end of trends, and that's a decent kind of break. Let's see how the market reacts on Monday, whether they see that as a buying opportunity of the of the next kind of year and kind of come in and pick it up. But we'll see. It's coming back to that kind of breakout level that we got a couple of weeks ago, and then just rolling through the other charts. So as a result of the equity markets kind of falling off, the bond market's rallying. This 30-year bond contract, and again I was talking about this, saying I was surprised this sell-off was so steep. We came into support, amateur down bar, exhaustion selling. It wasn't a Rambo pattern, but that's kind of a little bit unstable when the amateurs are kind of caught out kind of down there. And then this is support is held, and we've kind of rolled the other way. And dollar index, same kind of thing. So the euro is getting slammed, and then the dollar index is kind of recovering on the way up, kind of here bouncing after a fairly decent close on Friday. That they kind of bought the lows of that and kind of pushed it up quite a bit. And then when you look at all the risk-on charts, they're all kind of falling out of bed. So this is the euro's in a downtrend. We're below support. We kind of come down here. Exhaustion selling. This exhaustion selling is showing us and falling through the ice. This is kind of showing us the strength of the selling, kind of getting this move going. We had a little bit of bullish divergence right on the zero line here. So if anything, this has got to come back down to put in a flush pattern to show us that kind of activity. But on the downside, we're 2 cents off. The 31 kind of closed down to the 29 type numbers in the euro here, then rolling through Aussie dollar. Aussie dollar, I've kept on the better sine wave here on this indicator because it just shows the Aussie dollar is super strong. And I was saying, well, maybe we're going to support becomes resistance, we roll the other way, amateur up bar into there. No, they pushed it up to kind of 3.5. And now the resistance is kind of come in. It won't be a pullback and a downtrend. It'll just be a regular resistance level. But the energy will start to swing to the downside on the daily chart. Silver, again, I've been talking in the last couple of days, or the last video, just saying there was a lot of amateur activity, a lot of amateur bars on these retraces, and so they're kind of weak retraces. Silver's a classic. So with silver, you can see, we kind of sold off pretty hard. This exhaustion selling kind of just stopped dead in our tracks at about 28. But all the activity has all been amateur up bars. The amateurs kind of trying to hold the fort, trying to get the move going, and so on. Little amateur up bars, breaking the lows of these, and so on. So a break back down below 28 kind of keep us going. We're in a downtrend on silver. We're below support, daily support here. So this has got to play out, pull back to end of trend. There are stops and starts along the way, but we've not seen enough to end this by any means. Now this is interesting. This is copper. So copper was looking really weak. So they kind of complex correction on the way up, and they just said let's get out of this thing. Blue professional bars, professional selling down and down and down, and we kind of never made it close to kind of highs of these bars. We just kind of kept on going down. And then today's activity, just we're in a downtrend. We've broken through support, and then bang, just kind of pushed down really hard. And crude. So again, crude amateur bars, talking about this, not unlike the Aussie, kind of came back above support level, but amateur up bars into here Thursday, Friday, and now this is the overnight activity kind of coming around, pushing it down. And then gold, again, there's amateur bars. We're below support here. We're in a downtrend. We haven't seen bullish divergence to end this move. And then 1550 is kind of sitting there. It's a really kind of critically important level when you go back kind of historically on the chart. So some weakness in there. And initially gold got kind of bought up kind of when the news out of Cyprus kind of came in, because all of a sudden political uncertainty and uncertainty about the whole rules of how how possession of assets kind of works, hard-earned savings kind of works, that becomes questionable. And so with political uncertainty and stuff like that, the rules changing, gold tends to benefit from that. But it's interesting, it's kind of got sold down. So there we go, euro back to that. And then just looked at the daily chart. So we know the Nasdaq has made pullback to end of trend, exhaustion buy, and bullish blue professional bars kind of up here. So that's Nasdaq, and the Russell pullback to end of trend. Again, this kind of signal late, and then this signal kind of early. Interesting the way the Russell has kind of played out. We haven't had it on the Dow. So we've not had pullback to end of trend. We got close to that crossover, but it just went parallel and kind of kept on going up, just showing the strength in the Dow. And the S&P 500, we've had the pullback come in, and we're looking for that end of trend signal with this kind of crossover. And I guess we kind of get that with Monday's activity when it kind of finally goes off. And it's only now. I'm just always too anxious to kind of call end of trends and so on. This left shoulder, we didn't get the left shoulder, didn't come with exhaustion buying kind of here. And finally we do get an exhaustion buying signal with last week's activity, and then Rambo patterns up into those highs and a blue professional bar kind of up there, and that'll be end of trend will go off on Monday's activity on that chart. And the oscillators rolled at the end of last week into Monday's trade, and so just been sitting on these kind of signal shorts, and it's gone the other way, quite a long way the other way. So who knows, we need to give this thing time in order to take profits and kind of get some continuation on the downside. I'm not saying this is the end, the end of this bull run, the market's now going to go down or whatever. We've not had crash signal warning on the commitment of traders numbers. There's nothing particularly interesting on the commitment of traders charts that I saw this weekend to kind of point out here. Not saying that, but certainly with this activity and the news out of Cyprus, let's wait and see. It'll take a few days to ripple through in terms of the Europeans, what they think about this and so on. And it's it's 1 million people, but it's a game changer in terms of what is now considered within the rules in terms of dealing with the European system. And we've got capital flight. The euro's down, the yen is down, because that money is capital flight out of those markets, because it's not over by any means. And the safe haven at the moment is the US. So it's flowing into the US, and it has been flowing into equities, and certainly overnight it looks like it's going to be flowing into bonds. Anyway, there we go. Enjoy your trading in the next couple of days. Again, maybe I'll be able to sneak in a session between here and Wednesday when our friends kind of leave the island. But we'll see. In no rush to get back into it, but I'll definitely be looking at seeing what the charts kind of look like over the next couple of days.